This stock symbol is for a company called Gilead. They're in the medical industry, medical sector. Health sector is always, or has historically been nice and defensive, which is good when the market is performing very poorly. And it has the kind of trend that we would look for in a reasonable stock to add to a diversified portfolio. Now, Gilead has a return on equity of about 59%. But how did I find Gilead, and how can you find stocks within any particular industry group that you might be interested in, or that is that you can see has been performing well out in the market? How do you find those stocks, and conveniently, easily, and most of all, for free? Well, one of the things that we like to do here on Learning Markets is we don't have any proprietary tools, and part of that is that there's a lot of great stuff that's available for free. It works wonderfully. It's easy to use, etc. And if you don't overcomplicate things, of course, it can be very convenient. A lot of brokers, by the way, have great tools available for searching for stocks and for specific fundamental criteria. So if I were looking for, within the health sector, for good stocks performing well from an ROE perspective, my broker probably has some great searching tools, and it would be a great question to call and ask for a tutorial. Find out, how does it really work, and how can I put it to use in my own portfolio? If you don't have that available, or you want to use another service outside of your broker, I'm going to show you a tool that we've used quite a bit that's free. It's pretty good and is representative of most of the tools that you'll see out there in the marketplace. All right, so I have gone to Yahoo Finance. The URL specifically is screen.finance.yahoo.com. And from here, I can launch the Finance Stock Screener, which is actually surprisingly robust for a free tool. With a little bit of practice, you can find some pretty handy little uses for it. So we click this, and it'll open our Java window, which will then start to load the tool itself. The tool is loaded, and it's basically divided into two small sections. And again, this is very representative, actually, of how most of these online tools work. So whether you're using one from Yahoo or Google actually has an interesting one that's being developed right now that has some really cool visual charting features. A lot of different online brokers have some pretty fantastic tools as well to do the same kind of thing. And it's generally, they're all divided into two segments. There's the screen portion where you select your criteria, your fundamental criteria that you want to use, and then there's the results. So we start to add some of our criteria to begin with. Now, this is where we get into one of the first things that I said when I started this section, and that is don't overcomplicate things. You don't need to be a finance professional or an accountant to understand what's going on. What you're really trying to do is to prove historical performance and to remove some of the unknowns that are associated with companies that either have very erratic past performance or have never been able to show performance at all. So we're talking about profitability and a return on their corporate structure, whether that's assets, equity, etc. So let's create our search step by step here. We're going to first add our criteria. This is going to be descriptive, so we're looking at the sector and equals. And what sector should we choose? In this case, what I had run through is healthcare, and the reason why is that I look at healthcare as somewhat defensive when the market is a little bearish. The next criteria that we're looking for, and we really don't want to overcomplicate this, so I'm going right down to profitability, selecting return on equity. And in this case, I'm going to select, rather than getting too complex here, I'm just going to select greater than or equal to, and then it's going to ask me, okay, so what percentage do you want this return on equity to be? Greater than or equal to what? This is where I think that a lot of traders really constrain their choices by setting a very high or even high as possible or something like that on the searches that they do for fundamental screens. I'm going to set it to 5. And the reason why is because this will really give me a view as to, well, what's normal for this particular industry group. So if we run the screen, we'll get a list of stocks automatically, the ticker, company name, little stock information, and then over here on the right-hand side we have our return on equity number. I can actually click that column head, and it will then sort these stocks by those with the highest return on equity number down to those with the lowest return on equity number. Now, automatically you can always get an immediate feel for the outliers, those that are statistically not very representative of the industry group as a whole. So these top two are clearly not very representative of what we might expect the entire group or sector to look like. They're just they're outliers. They're out there. It's a bit like investing in stocks that are at their 52-week highs. As we scroll down here a little bit, you can see we're getting into the fat of the industry group here in the 60s and 50s. Here's Gilead. This is one of those that I was looking at. GILD with a return on equity number of 59.6. This was well above the average for this particular industry group, which indicates superior performance and a proven ability to perform in the recent past without getting into those that are average or below average, where you'll see capital flows when the market, especially when the market is a little bearish, you'll see capital flows fleeing from companies that are below average within their sector and into those who are above average. So that's one of the things we're trying to capitalize on right here with Gilead here in the upper quadrant of this particular industry group. You can see as well, as we scroll down the list a little bit, those return on equity numbers beginning to really drop below the profitable side of the industry's average. So down here towards the bottom, we get FRX, Forest Labs, which is in the same market cap range as a lot of these stocks. So we're not going all the way down to the bottom here with Daxter, which is a very small company. But FRX, still performing, still returning net income, and still returning on equity, but obviously much, much lower than what we saw on the higher side before we got some of those outliers at 28%. Well, we can take a look at, see exactly how this translates into performance on a stock chart. So this is FRX, and over a similar period that we were looking at with Gilead, you can see they have not been very defensive. In other words, as investors' capital flow shifts from higher value assets that are higher performance in one industry group or another, they'll move from those with a lower performance into those with a higher performance, which drives stock prices down in the case of FRX and up in the case of GILD. Now, you may still be asking yourself, gosh, with such a robust series of tools available and so widely available to such a broad spectrum of investors, am I squandering a little bit by constraining my searches to just one criteria? Well, no, because ultimately, no analysis is going to perfectly predict what's going on in the market or the likelihood of one stock to rise compared to the market or compared to another stock. You're kind of doing the best that you can to remove risk, to remove unknowns. And so a lot of your performance in your portfolio is going to be due not necessarily to how well you did your initial analysis. There's a few things you can do to help improve that, such as screening for profitability, as we've been looking at here. But ultimately, your performance is going to come out from how good of a manager are you? How well are you constraining risk? What are you doing as far as diversification and portfolio management? These are very important questions to be able to feel like you have a high level of competence in, and is something that we're going to be discussing in a lot of detail here in the course. The one question that I get quite a bit when I present an idea like this is, well, if there were one other criteria, what would you look for? And the answer probably won't surprise you. I'd look for dividend yields. The question is always going to be, what criteria could I look for that is going to demonstrate most effectively management's attitude towards its shareholders, which is you, and its ability to return on its return on its use of its assets. So dividend yields is going to be one of those measures that will present similar information, and ultimately, in my opinion, it is the most valuable indicator next to a number like return on equity, which shows some very similar things and answers very similar questions about the company and about its performance. So my suggestion to you is, once you've learned this kind of thing, check it out on your own. Run a few searches and accumulate a portfolio of stocks that across a breadth of different industry sectors to add to even a paper trade portfolio, so that you start to understand, how do I search? How do I add these stocks to a portfolio of my own? And subsequently, what's the performance really like? How well am I really managing the opportunity?